In the week ending September 19th, the advance figure for seasonally adjusted claims, 870,000. That is more than we anticipated. At least the consensus was for 840,000. And last week it was 860,000. Now that we've had 3 weeks of this new calculation, you can begin to make some comparisons. The number that we have been following, which is the non-seasonally adjusted number, goes up by 28,000 to 824,542 from 796,000. So either way you calculate it, it looks like jobless claims are up. Pandemic unemployment assistance, that's the one that goes to the freelancers, drops by 45,000 to 630,000. And then the total number of people who are on benefit rolls drops significantly to 26 million from 29, almost 30 million, a drop of 3.7 million. This is all going to feed into the questions about how accurate all these numbers are. We saw criticism of California the last couple of weeks because their pandemic unassistance program, a jobless program, had something like 524,000 people in it. And they went back and they've started culling the rolls, and they've fallen quite a bit. And California has now paused accepting new jobless claims because they are worried about how much fraud there might be in the system. A lot of people, Steve Stanley up at Amherst Pierpont, has been on this for a long time, doesn't think these numbers are very accurate. Let me just point out, about 4 weeks ago, we had 524,000 pandemic claims in California. Last week, we had 99,000. So a big drop as they start to look into this.
The market's voting here with the yields coming in. John Farrell, 140 down to 139.81. I understand it's just a little bit, but John, can we say directionally yields come in as equity futures deteriorate?
I think you can say equities come in, that's for sure, Tom. Down 0.6% on the S&P. The Nasdaq 100 is where the underperformance is. As I say, we're down by more than 1%. You know, there's a famous quote, Tom, and it's from a British economist, Ronald Coase, that if you torture the data long enough, it will confess to anything. I think in Europe, you don't have to torture the data long enough to really find out that perhaps this economy is slowing down pretty quickly. I just wonder if you can compare that to the United States. Is there an argument, Tom, that the improvement is stalling out, or are we seeing a continuation of that positive improvement? I'm
going to go to moving averages, but Michael McKee, as you said, and I highlighted this earlier from Economic Policy Institute, Michael, it's so grievous. We're not double counting. Can I say, Michael, that we could even be triple counting?
It's very possible. I mean, the thing to keep in mind, though, is that the numbers are still extraordinarily elevated, even if we were triple counting. I mean, divide the 800,000 by 3, and you're still above the highest level we ever had prior to the pandemic. The other thing to keep in mind is that the alternative data that a lot of people watch, Homebase, which tracks small business hiring and how many are open, has shown a real flattening, has shown that the number of companies open has started to drop in recent weeks. So there is anecdotal data, and Rich Clarida was talking about it yesterday, that suggests that there is a bit of a slowdown going on out there. We don't have a great picture on how much, but the numbers still continue to show at least a slowdown, even if we can't believe the actual headline number.
Mike, there's a big difference also between job losses that are temporary, which were the bulk of them initially when the pandemic took hold, and permanent job losses, which is increasingly the nature of what we're seeing right now. Can you quantify that and give a sense of why that is such a big distinction?
Well, what's happened is a lot of people went back to work. A lot of companies reopened and then found they didn't have the business. And we're seeing this particularly in the service sector with restaurants, bars, and they have started to close up. People don't have jobs to go back to. An awful lot of retail bankruptcies as well, stores closing and people out of work. So this is going to become more and more of a problem, and it's something we're going to look at on Jobs Day. The number of people on temporary layoff has significantly dropped, but now the numbers who are reporting they have lost their jobs permanently are rising, and that is something that the economy has to worry about. A number of Fed officials yesterday, regional Fed bank presidents, were mentioning that as a major concern in their districts.